All right. What is up, tycoons? What's up, traders? Super excited for today's video with FOMC fast approaching and the next Fed meeting right around the corner. We got to talk about treasuries. Okay. A lot of people are focused on what the Fed rate is going to do. What they're going to say, if they're going to say that they're going to continue raising rates of higher for longer, as they've been kind of mentioning. They've already paused, but it seems like the market is pricing in another rate hike. So we're going to go over some different trade ideas and what to pay attention to in the market in today's video. So please be sure to smash that like button and subscribe to the channel for more. We have TLT here, okay? Now, TLT seems to be starting to bottom out. Right. When we look at much more of a long-term perspective, we are trying to put in a bottom here, it seems. Now, does that mean that there won't be short-term volatility and we could see it zigzag up and down through here? Yes, that's very possible until the Fed path is truly clear and until they really pause and then eventually start to cut interest rates. That's definitely a possibility. When we take a look at TNX, it looks like we're trying to top out here, okay? Now, treasury rates have recently broken out, but they haven't broken out past our most recent high. So that's the big thing that a lot of people are going to out for. It seems that the high is in at the moment in treasury rates, and we're going to see if TNX can slowly start to creep down or potentially if it's going to break out. Now, today's video is sponsored by Simply Wall Street. It's a really great platform. You guys get a 14-day free trial and up to 40% off if you guys choose to get the membership. All right, it's very affordable with that discount. It puts it at less than about $200 a year. In my opinion, that's very affordable, less than $200 for the entire year. As always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, when you take a look here at the US 10-year note, all right, it looks like it's starting to bottom out, okay? And, if the note is going up, that means that yields are going down, basically. Now, there's some important data here when you look at the commercials and the large spec. Essentially what we're seeing here is some bottoming signals, right? So if you take a look right here and right here back in 2018, you can see that that's when the 10-year note started to put in a bottom and actually started to rise again. And here we're seeing the same exact thing where we're at very similar levels to where we were in 2018 on both of these areas, right? So that could potentially be a bottoming signal, right? Now, when large speculators are at consensus, it consistently pays to take the other side of their bets. Take 2018, for example. At that time, the large specs had on their largest short bets in the bond market ever, and then bonds went on a historic run. Now, here we are, large spec are betting more aggressively than ever that the 40-year bull market in bonds is over and a rising rate regime is here and here to stay. Are you betting that bonds are about to collapse? Immediately after they just collapsed, we just saw the largest rate of change in rising interest rates ever, and now they want to bet on rising rates. No thanks. We're taking the other side and looking to buy bonds and are positioning ourselves in assets that benefit from lower rates. One sector that is standing out as bonds are starting to get going is bank stocks. I was promised a banking crisis, but all I got was one of the strongest bull markets in history, right? And if you take a look at the performance of the Nasdaq and the S&P 500, okay, in the first half of this year, this is an amazingly strong market that we're in right now. Now, here's what the S&P Bank Index looks like as it breaks out to new 4-month highs. You can see here we had a very, very clean left shoulder head, right shoulder. We broke through our neckline here, and it appears that we could be set up for this nice inverse head and shoulders to play out and potentially take us up here to the 40s, maybe even 44 and 45 on the KBE. Now, this is the Russell 2000. This is your IWM. The IWM has been lagging compared to the S&P 500 and the NASDAQ, but this one moves a little bit slower, right? You can see the nice rounded top we had over here, right? And it took a while, okay? This was a very long consolidation period before the downtrend really started. And over here, we can see that, again, we're taking a while, but it appears we have a nice rounded bottom in here, and we are potentially looking to break out, right? If we just draw a simple trend line right here, you can see we're very close to getting the breakout on the Russell 2000. So will we reject again and head back down lower, all right, potentially for another move to the breakout, or will we potentially get that breakout and retest that we're looking for and come up and test this prior supply zone or support zone that turned into resistance right around the 210 to about 212, 215 area on the Russell 2000. If we take a look, the commodity report with some new trade ideas, grain and livestock from the desk of Ian Cully, commodities love the falling dollar. Now, grain has been particularly of interest due to the things going on with Russia and Ukraine. But if you take a look at this residential construction stock, LGI Homes, this is ticker symbol LGIH. All right, we have a very nice cup right here. All right, and we could be setting up actually for a cup and handle. Now, what you would be looking for is a breakout retest of this 135 area, and then potentially we could be heading up back to the highs of 189. All right, that would be, a little bit more of a long-term target right here. Now, if we do start to get a pullback, that's when we would look for this handle to form. Okay, and then we would need to break above that 135 area again. When you look at the relative strength, and you guys know I do this in a lot of my videos, we oftentimes look for this breakout retest of the trend line on the RSI, and that's a really strong indicator of where potentially the stock can go. And you see, we did that very, very textbook here. We got the breakout retest, and we're pushing up higher. This is something that I cover in a lot of my videos, and a lot of people don't use relative strength the right way. And there's a lot of misuse when it comes to relative strength. Now, this are the December corn futures right here. Okay. And so we're wondering, are we potentially about to see a rebound here and start to bottom out in the corn futures? All right. That's definitely something very interesting to pay attention to right now. We have soybeans here as well, looking strong. Okay. Soybeans are also looking strong. If they can get above that 1378 area, then 1414 is going to be a good target zone. And ultimately, long term, if we can break out above here, right, the next target zone would be around 1580 on the soybeans. Now, this is the December soybean meal futures. All right. And, this is also looking strong right here. We have our 14 period RSI right here. We were currently overbought. And now we're starting to pull back, but overbought is a big sign of strength, right? And so we saw a lot of strength. We've gotten the healthy retracement now. And if we can get above 408.62, then potentially we'd be targeting up here around 437.55. All right. This is the soybean oil futures. Nice bull flag that we're putting in right here, and we're going to see, can we break out of this pennant here at the moment. That's going to be a big determiner if we're going to see a push to the upside up towards that $71 price area, or if we're going to get a breakdown back towards 55,761. Now remember, we talked about the trend line here. We want to see if we can break through this trend line here on our RSI. That's going to be a really good sign of really good strength and momentum, and see where we can go. Okay. This is our momentum thrust. After we have the big push up, then we start to consolidate a little bit healthily. And you can see, this right here is the moment where we peaked out on the RSI, but the stock has still continued to go higher. So there is a little bit of this bearish divergence here at the moment, as the stock is creating, or the futures creating these higher highs with the lower highs on the RSI. But if we can break through there, then that would be a strong, strong signal of strength in the soybean oil futures. Now, this is the September wheat contracts. All right. Wheat and grains have been, pretty popular right now due to Russia and Ukraine. There's a lot of tension on these. And so what we're seeing here is, again, that nice rounded bottom pink feature. And if we can get above here, right around 674, then we'd be looking for a retest of 732 again, and ultimately see if we can get up towards this 808 area on the September wheat contracts. This is the September KC wheat, KWU3. All right, it's very similar setup here. All right, we're looking and we're seeing, ultimately signs of bottoming here, and we're going to look to see if we can break out past this 895 area. If we can get above there, then we'd be targeting 996. That would be the next zone and next target that we're really looking for when it comes to those. This is the September MPLS wheat right here, MWEU3. All right, very, very similar chart. Okay, here we have the bullish divergence highlighted. You can see here where we're creating these lower lows on the chart, right? So, ultimately creating lower lows right here, but then we actually start to create these higher lows on the RSI. This is an indicator of bullish divergence. It's a sign that you may see some bullish activity. We're also seeing signs of bottoming with this nice rounded bottom here. And if we can get above 904, we'll be looking at 983 as a potential target area. This is live cattle. Live cattle had a very nice breakout here. We've started to pull back, but if we can get above 177, then we'd be looking to retest the previous highs and potentially even create new highs. So look for another nice little rounded bottom to start forming sometime here soon in the future, right around this area. And getting above that 177.175 area is going to be a key level for the August live cattle contracts. Here's the feeder cattle. All right. This looks very, very good. You have this parabolic curve right here. Now, there is a little bit of some bearish divergence, all right? And so we could see a pullback if we break this parabolic curve. But what you want to look for ultimately is, again, the break of this bearish divergence trend line, right? If we can break above this, that's going to be a really good sign and a really good indicator. And you'd be looking for a breakout retest of this trend line and then another push up higher. Here's the August lean hogs contract right here. I mean, this thing went parabolic, right? Really went just almost straight up right here. We're starting to get some healthy consolidation. We want to see if we can hold above this 94.5 area. That was a key area in the past, all right? And then it turned into resistance over here, and now we're retesting it back at support again. So you want to pay close attention to that 94.5 area. That's it for today's videos. Shout out to All Star Charts for a lot of those charts. If you ever want to email me for a one-on-one personal session, you can do that at zachleytrades@gmail.com. I do coaching sessions every single week. And if you're interested, we can work on scheduling a time together. Appreciate you watching the video. Smash that like button, subscribe to the channel for more.